Hi, this is Raghee Horner, and if you're hearing Wyclef and Akon singing Sweetest Girl, you know it's dollar index update time. So let's take a look at the daily chart of the dollar index as we see how last week's bullish headlines on the Euro US dollar put a lot of pressure on the dollar index, sending it lower. So we have two jobs as traders when we look at a market that's in a trend and we see a trend correcting. Number one, we need to know the difference between a correction and reversal. This market is still very much in an uptrend, so when I look at prices moving lower, I need to keep the perspective of, yes, this is an uptrend that is pulling back. Now, I personally would not even consider thinking about a reversal of this daily charts trend until we get below the 61.8 Fibonacci retracement or even the 34 period EMA low, which is this red moving average down here. Realizing that all the bullish headlines that were coming through on the Euro US dollar last week, what did we have? Let's think about it for a moment. We had this rumor of the Chinese considering buying Italian bonds, even though there wasn't any action at the time and there certainly weren't any figures put out there as far as what they would buy. Then we had Sarkozy and Merkel come out and vehemently tell the market they were convinced that Greece would stay in the EU. Well, that's fine and all, but they didn't really talk about being convinced about a lack of default, right? We consider what's been happening with those default worries. Think about what's been happening in terms of this positive push of headlines last week, and now what are we dealing with come Monday? Today's the 19th. Like a skipping record, Greek default worries are right back in the headlines. So that's putting pressure on the Euro US dollar again. But keeping perspective means that when I'm looking at the correction on the dollar index, that I keep in mind that at some point, if I can identify where it's most likely that the bulls will step in and buy the pullback, I can go ahead and realize that that support on the dollar index is going to equate to some sort of ceiling on the Euro US dollar. And where was that floor? Take a look here. I think it's fairly easy to recognize, but I'll show you three different reasons why about a 20 tick area was really where the safety net seemed to have been most likely to kick in for this futures contract. First of all, I'm looking at a correction and not a reversal because we have this very healthy 12 to 2 o'clock angle on the 34 EMA wave dominated by the green grab candles, showing me that we have organization of bullish sentiment, creating bullish momentum, and that bullish momentum has been in place long enough to pull up the three lines of the 34 EMA wave into an uptrend or a mark-up phase. This black moving average swooping across here is the 200 period simple moving average. I don't know of any more psychologically powerful a combination than a 200 period simple on the close and a daily chart. It is so widely watched and respected that it becomes dynamic support or resistance. In this case, dynamic support. So I have the 200 period simple, which frankly, in and of itself, would almost be reason enough to expect some sort of near-term support. But we can add a couple more layers to that. We can add the 38.2% Fibonacci retracement from the last major move, which was, as you can see, an uptrend. Okay, I'm taking the high and the low of this last major move and calculating the Fibonacci retracement levels, which in this case act as support as prices are moving lower, 38.2. And then I also have this 76.09 low on this wick here. That was just 9 ticks from the double zero of 76. So I've got a major psychological level, a 38.2% Fibonacci retracement, and the 200 period simple moving average in about a 23 tick area on the dollar index. So to say that the dollar index was going to find support between, say, the 76.20 minor psych level and the 76.00 major psych level was not a stretch. It wasn't a stretch to step in and say this is probably where the correction is going to stop and we'll see a resumption of the uptrend because the bulls will feel very emboldened to step in here and begin to buy dollars again. That's technically speaking. Again, fundamentally speaking, one of the things that I talked about last week was that as soon as those bullish headlines faded from memory and from the front page of every financial homepage, every financial website homepage, that the euro would continue on with its downtrend. And that's exactly what we're seeing. This pair was actually buoyed higher by that stream of bullish headlines, and as soon as those stopped dominating basically the psyches of traders and basically the media headlines here, the euro would continue with its own directional bias, which is bearish. So we don't want to fight the trend longer term. We want to recognize corrections versus reversals, and we want to make sure if we did want to take advantage of this really nice move higher, we do so on shorter term time frames, like the 5, like the 15, like the 30, where we will not put ourselves in the uncomfortable position of having to expect longer term counter trend organization of sentiment and momentum. We don't want to fight the trend on long-term time frames, but we can definitely take advantage of corrections like this one here on the short-term time frames. It was okay to be a bear short-term. 5, 15, 30-minute charts were the best way to do it. But longer-term, directional bias, don't fight it. I hope I got that point across, and here we see the trend resuming on both these very important symbols.